All right, boys, we back, and girls. I don't think I have any girls that watch this video, but watch these videos. Anyways, so we're gonna continue on with the basically the content where we're trying to develop a prediction model. I mean, it's kind of already developed, but that is going to utilize several different methodologies. So, first thing we're going to look at is the overall market environment right now, using this MMRI, which is just like a risk indicator. Greg Manarino came up with it. Very nice. Go check out his channel. He basically uses the dollar and the US 10-year to predict the markets, basically to predict the risk environment. And right now, using this indicator, which you just multiply the 10-year and the dollar together, divided by 1.61, you're going to get a number between 50 and 400, which is going to give you an idea of the risk to hold or to be long equities right now. And right now, you're sitting at, here's the last couple days of trend here. So right now, we just came down to 95. So we were at 98 on Friday. And after Friday close, we basically came down to 95, which is good. So trending up into all-time highs. And then basically that little sell-off, I think this right here, took a little bit of risk off. And I think that basically kind of calmed the market down a little bit here. So that's kind of my thesis going into next week, is that the market really wants to pump higher if given a chance. So all dips are essentially to be bought. So with that as our backdrop, if dips are to be bought, we're going to come down to this 13 market moves sequencing patterns. I'm not going to try and teach the moves, because you have to pay for the course, which really is just a video, but I went ahead and made a PowerPoint with it. But it's going to teach you the 13 different types of market moves that can take place. Okay, so then we're going to track these. And so here's the market moves since the Fed low over here. This was the FOMC day, where they basically came out and said they're probably going to taper for sure, and then Biden spoke. Okay, so that happened. That was a thing. Where was Powell? It changed the entire pattern of what FOMC days have been like. And so with that in mind, what I like to do is put this little low in here. But with that in mind, we have a situation where the low was put in on that day. And that typically happens. Once all the volatility is taken out of this event, it just basically causes this melt up here. Now, we're tracking the patterns here. That was a move 7, 1. These are all bullish. That's why they're green. All these different moves. At a 13, a 13. But we can start seeing the patterns weaken here a little bit. And with that risk indicator going up, we're trending higher in the risk. I was expecting a little bit of a pullback. But that pullback was bought. I wasn't expecting a sell-off. I was expecting a pullback to take off some of that risk a little bit. And so coming into today, Friday, basically looking at what's happening is the problem is we're also looking at the Mobidex too, and this is going to give us an indication of options activity, which we always want to keep track of. Options really kind of run the market. And we had this reading here on a Thursday of 12,600. Amazon gives you this list of who's attributing to that reading. Okay, so this is basically just options quotes that have been flagged by this unusual Wells algorithm or the bot, and then it kind of tracks it, puts it into an index. Well, 10,000 of that was basically Amazon. So if you X Amazon out, the reading was only 2,400. So given that Amazon was such a high reading, I was expecting a pullback on Amazon to occur, because that reading right there of the entire market would have been overbought by a long shot, given that the highest reading since November 2nd was a 10,000 for the entire market. So given that Amazon printed a higher reading by itself, I was expecting a sell-off. Now the sell-off wasn't that bad, given it was bad, but it wasn't that bad given that how much of a reading that was. But as soon as the market opened, I just went and bought Amazon puts and just basically held them until I saw it start bottoming out a little bit, because I didn't, it was Friday, I didn't want to hold them too long. And the market was relatively strong, given that Tesla is giving the market a lot of confidence, a lot of strength. But okay, so with all that in mind, we're basically going to keep moving on here. So Mobidex for Friday ended up coming in at about minus 1653, which if you look at that, just kind of right in the middle of this range here. So so we got risk indicator coming down, meaning it's less risky to buy. So likely to buy dips. Dips are likely to be bought. We have a dip buying pattern forming. The sequence right now is 6 in a row, essentially. And if you know these bullish patterns, then you know you can kind of get an idea of the timing of the buys. And basically, we're just going to assume that any dip into a support, at least the first major dip, is going to be bought, and that's what we're just going to assume. So, basically, what I'll do is I'll come in here and go, okay, did we gap up or gap down, and that'll eliminate some of these moves that could be possible. And then we're always going to consider these are the bearish moves, 2, 3, and 11. We're always going to consider those as possibilities and be on the lookout for those. So this is kind of the sequence pattern that we're looking for. We don't have any kind of significant readings happening on the Mobidex. And then SPY flow, it's pretty bearish. So you're bearish on the 1000s, you're bearish on the 5000s, 70 to 29. You're bearish on the 15,000s, 86 to 13. Okay, that's pretty bearish. All right. Pretty lopsided, really, but nonetheless very bearish. And then same thing, 80. So this could all be hedges, and so if they're hedges, then it's not a huge deal that they're bearish. And then also, where are they bearish? They're bearish on the 450s. This is the 30,000s, 450s, 453s, 430s, and even out to 500. Yeah, even out to 500. They're bearish, so likely not buying, probably not long puts. They're probably short puts, but I'm not sure exactly why they would be so bearish up to here. But they are only really bearish on 1217. So keep this date in mind. This 1217, probably an OPEX type of situation again, where you don't really have to be worried about major sell-offs until we start getting closer to this date. So we have about 2 months right now where big money, they're preparing for that date. And it's similar to what recently happened too, where we had last OPEX, it was the same situation where they're all just buying the same strike and just bearish the same strike. So it's the same exact situation where these puts are likely not to pay out in general, unless they're just short calls, which is a possibility too. You could just be short calls into that date as well. So basically my thesis around this is just that, okay, we've got a timing window here. So our timing window is 1217, and the small money, thousands, 5,000s, they're pretty bearish going in the next week, and that kind of gives me the idea that retail is bearish. And if retail is bearish on the short term, then we're likely bullish again. And that would just shock people, right? That would shock people if the market went ahead and gapped up. So here's kind of like my structure here, just based on this day. If we just gapped up here and then came into these levels, retested, and then ended higher, somewhere around 457, 458, that would, a lot of people, a lot of puts, a lot of people trying to buy puts for here are they're all done for, at least in the short term. So that's my thesis here, is that this is kind of setting up for a rip higher. And I'm really not bearish until we can break this 446 on the SPY anyways, because that's just the anchored VWAP low of, and you can even do more anchored VWAPs on this day too. You can do a one from the high as well. That'll kind of give you an idea of, give you another level to look at. So now we got a little bit of a range here, but yeah, I would not be super bearish, at least in the short term, for any kind of longer dated puts. Maybe intraday type stuff, like when you're playing like this Amazon play. But for now, I would be expecting dips to be bought in the cash session, and for us to just keep moving higher here. So watching Bitcoin too. Bitcoin had some interesting situations happen where they keep trying to sell it off from all-time highs. They just tried to break this previous day low. I was just watching this morning, and so they tried to break this previous day low, and they got whoever's trying to short here or selling here got absolutely destroyed. So, I mean, yeah, they massacred. So this is a very bullish situation here that happened where you couldn't break the low. So who's left? Who's going to sell now? I don't know. Are they going to come back and try to attack it again? If they do, they probably get destroyed again. So this is just kind of my thoughts going into next week. Obviously, want to keep watching on Tesla as well. If Tesla is bullish, it's going to be hard for the market to go down. I'm going to keep watching Amazon. If Amazon starts turning around into earnings, then obviously this is going to bring the market up as well. So keeping in tabs on the earnings. So Amazon, Tesla, you can see then RTY. So these are my themes. You also got big large cap tech earnings like Facebook, Amazon, etc. So we're keeping tabs on those because those can have an effect on the market as well. So, and then the Russell. We are watching Russell, which is kind of an indicator for small caps. And so we keep tabs on this thing just because if this is strong, I mean, this basically the reason you do this with the Russell is because right now you can see, let's just use IWM just because we'll get a better picture. It's still in a super long range here. All right, so we're looking at this range, and everybody obviously knows about this range that follows the indices. That we've been stuck in this for a long time, and whichever way it breaks is going to be just a massive ripper, I would think. Unless they fake people out again like they did with Amazon. And if you know about Amazon, this basically you had the same situation that was happening there, where you had the channel for months, and then they try to break it out, and then they bring it back into the channel. So this is another reason why I was fairly bearish on Amazon coming into Friday, just because there's no way after a move like this that they're not going to come back and at least retest it, especially given that we haven't broken out of this channel on the longer term. So anyways, going back to IWM, I'm watching this because if you look at this indice versus the others, you obviously have SPY is retesting all-time highs already. Now, does it create a channel like IWM? Possible. So you got to keep that in mind as well as far as long term. But it came up, retested all-time highs. What about Qs? Qs have not quite made it there, so lagging a little bit from SPY. And then you got IWM, which is obviously lagging as well. But so this is the bigger laggard just because this one hit all-time highs a long time ago, but then has just been trending sideways. So now we're waiting for it to come back again. My guess is it once Qs and IWM want to test all-time highs again, and so we're keeping our eye on that. So I always have this in the back of my head: what's the Russell doing? What's Amazon and Tesla doing? And then we'll watch these other earnings. The fact that Netflix was flat, the fact that Tesla was flat on earnings, fairly flat. Netflix was fairly flat, but it wasn't a huge sell. That also gave me a bullish bias. Given the fact that we've been bullish sequence, low risk, and Mobidex is essentially flat, which is probably because we're coming into big earnings. And then we're super bear on the flow, but not until 12/17. And then we've got the themes essentially where the small cap needs to go retest all-time highs again, and we got Amazon and Tesla as kind of our big players for tech, just to kind of watch them as far as indicators for the broad market. And then Bitcoin breaking all-time highs. It's not exactly a bearish scenario. Bitcoin is a lot of times a leading indicator for the markets, and so them breaking all-time highs and then coming back to retest is essentially a bullish scenario too as well. So anyways, hope this helps you guys get a little bit of a thought process going when you're thinking about the markets. This is what I think about, and So hopefully it helps you come up with your own. Or yeah, if you like this kind of thing, just let me know. Peace.